All right, what's up, traders? Welcome to the official Trade Talk channel. Let's go ahead and get into Bitcoin and get this thing done and over with as quickly as possible. All right, as you can see, last week we did get a break above the 21 on the weekly time frame. For me, that's extremely nice. I like to see it. It could take up to 2, 3, even 4 weeks to set a bull trap. So be aware of that. Just because you break above it and close a weekly above it, it does not necessarily mean that you are out of the woods to the downside. However, it is bullish. We have already gotten a retest of the monthly supply, which is the level that has been in play since it was put in. We have been discussing that level for a long time here. You actually got a chance to buy that price yesterday, but it would have been a scary day to buy it, as you would have been buying it on a very big down candle. But we'll talk about that here in a second. Just understand that, 1 week above, this week closes, however it closes, will be fine. If you get bullish continuation on the third week, then I would say that the trap scenario could be gone. But I mean, at any point in time, Bitcoin could roll back over, right? Obviously, there's a lot of supply sitting at about $30,000. So we'll see what happens. As of right now, it is trying to be bullish. So yeah, let's go back over here to the daily time frame real quick. All right. So you can see yesterday ended up closing as a bullish engulfing. You took out the previous day's low, took out the previous day's high. That is the definition for an engulfing candle. Over here, we call them outside day candles. You only have three types of candles: inside days, outside days, and trending candles. That is it. There is no other type of candle. That's how we discuss candles. But anyways, you can see we did not close above daily res, but you did get a test of monthly support going intraday down here to the hourly time frame. This was when we got the NFP news. You can see that 8 a.m. Eastern Standard Time, the news comes out at 9:30. It did come down and test this support right here and gave you a little bounce, but then ultimately, boom, it dropped all the way down to that monthly support level, which was 27,223. It's been in play for a long time. Good area to buy? Yes. Why? Because you're still above the 21 on the weekly closing basis. Then boom, up she goes. So it's just trading sideways, seeing how it's Saturday. So there's not much to talk about today. As long as it maintains this bullish posturing with being above the weekly 21, then I have a bullish bias on Bitcoin. I do have a near term short on it though, but that play is just a hedge. It is not a full size positioned day trade. It's just a hedge. So I'm more than willing to take a loss on that. As a matter of fact, I will not take a loss on it because my stop is setting below break evens. If we spike back up the quarterly supply, then I will be stopped out on that position and I'll look to hedge higher. I'll show you that quarterly supply real quick. It's coming from this candle right there. So that's where we tested. That's where we failed. But like I said, on the weekly, it looks good. It looks okay. Even if it closes as a bearish candle this week, that'll be fine. As last week was your breakout candle. As long as we don't get like a topping formation and then a close back under, then this will be a bull trap, and that hedge will be, working. So we are on the lookout for a potential bull trap, but that's neither here nor there. When Bitcoin or any asset for that matter trades sideways, moving averages are not very helpful. They are very helpful in a trending environment. So if Bitcoin's about to make a trending environment, because down here was the 200 exponential moving average, that is typically a good place to buy. I mean, that's where investors look to buy when buying, when they're in, their bull phase, bullish modes on assets. They look to buy around the 200, and you can see there it is. Going back over to the weekly here, the 200 exponential, boom, boom, boom. Look at all those weekly wicks, boom, 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 boom. So it does look like we did get a bit of accumulation there. You got your springboard formation. If you want to call this a white cough accumulation, you could do so. Three dry bottoming formation, not so much, but head and shoulders, whatever. I mean, they're all the same thing. They all mean the same thing, right? All right, good. All right, so that's Bitcoin. Here we did a little bit of live trading yesterday. I took a little scalp on the futures, the S&P 500 futures, for a very small win. I had already had a Walmart trade on from the previous day. The Walmart trade, we closed out with profits. No, to catch any bullish movement, right? Because we said yesterday that the S&P 500 traded down to its expected range low for the day, and there was also daily support down there. So if you're going to buy, what do I always tell you guys? Buy at support. But anyways, looking to buy, because also I'll show you when we get to the technical analysis side of the S&P 500. Basically, we were looking for bullish entries. So this is just where I basically put on the actual trade. That's a little better. Just checking the spreads here. 38.50. Go into it, find out where the 38.50s are. That puts you right there. Like if we get an up move that lasts for a couple days, then those puts will pay us. So even though it looks like if you go back to those charts, even though it looks like I'm putting this on at the high of day, yesterday the S&P 500 broke out and traded much higher than its expected move to the upside. So we'll get into the analysis here. I just want to let you see that I did in fact take the trade. It is a live funded account. Funded the account with $5,000. You can see currently year-to-date P&L, we're up over 20%. I'm selling a put. This means I want the market to stay above 38.50, and it's 105 days out. $205. One or more futures contracts have less than ideal bid. Yeah, I see that. It's bouncing all over the freaking place. It's $1.75 wide, but there's 660 or 652 other people that's done the same trade. So we'll sell this put. All right, so the max profit on that, we get a fill on the midpoint. It's got options on futures, so you can trade this 875 times in one day if you want. That doesn't make sense to me. You can only trade stocks 3 times with an account smaller than $25,000. In, out, in, out, in, out. That's it. Done for a 5-day rolling period. You get one reset on this if you accidentally go over. I did. I accidentally went over. I hit 4. They told me not to do it no more. Just waiting on the fill. I'm sorry here. Let me speed. Oh, there it is. I just all right, good. So there is the fill. I'll show you that position now. You can see there it is. I'm in the positions tab. This trade yesterday at the close was up $40. So another $20, and then that would be $60. That would be 1% on the account's total equity. So as long as the S&P 500 continues to go up, we have a maximum win of $200. So you can't make more than $200 on this trade. But at the same time, with the account's equity, that's a fantastic gain. But if we continue with upside momentum coming into next week, then I will indeed take profits on that trade and look to sell some more. Here we got, this is the S&P 500. This is the weekly. Let's go to the daily real quick and you'll see what I'm talking about. All right, so I've already changed the chart around for Monday. As you can see, Monday we're ready to go. Basically, these lines may move a little bit because I like to do wherever the SPX opens. All right, and once it opens at 9:30, because it gaps up and down all the time, right? It gaps up and down all the time. So right now it's set for, as per Friday's close. The expected move high would be 43.40 on the SPX. The SPX has not got the same prices as the ES futures. Keep that in mind. 42.76, 30.73. I think the expected move is, so we need 14 oct 14s, and it says $112 is the expected move. So basically what we'll do is, that's for the week, right? The weekly expected move. Monday's expected move is $32. So basically you just go from wherever the SPX opens, You go up 32 bucks, strike a line, go down 32 bucks, strike the line. All right. And that will give you your S&P 500 expected range. Now, on this day right here, we also did a live stream and I got stopped out of it. But this traded down to the expected move also was daily support. And I explained in that live stream exactly what I expected this thing to do was since non-farm payrolls was going to be tomorrow or Friday, I'm going to get long at the bottom edge of the expected daily range and also at daily support. And I'm going to trade it back up into the range, but I got stopped out. So even though my thesis worked out, even though it did exactly what I said I expected it to do, it did it. I was still unable to translate that into a winning P&L for that day. So it's impossible to win every single day, right? I mean, it's impossible. You're going to have losing days eventually, right? Sometimes I can win every day and then go for a few weeks to win every day, but eventually a loss will pop up. It's just the way it works because I'm very risk averse. I'm not trying to lose money. I'm trying to build money on the account live as I go. So that way my audience understands that you can listen to my advice because I am indeed profitable, right? Is there any other YouTubers that have a live account with real money in it and it's their own money and they're trading it and showing you as they go? They're winners and losers? Probably not many. I'm sure there's a few, but probably not many. Most people would make you pay for that service. All right, so anyways, moving forward, next week's expected move for the SPX, 42.02 to the downside, 44.14 to the upside. Now, let's just be clear. If we do get a bullish push and we do, get near that 44.14 area, this put will be, I will be buying this put back for a fantastic gain. All right. All right. So let's go look at intraday price action, what happened on Friday. So once again, we traded down to here, which was the expected move. I got long on this 5-minute candle right here as it traded down, triggered me in a trade. 10 minutes later, I got stopped out of that trade. Then I took another entry here, roughly in this area. And then as it pushed up, I took profits, which was about 0.5% of total account equity. And then it ran up and went ahead on up without me. Now, there's no way I knew that would happen. Obviously, I can't see into the future. But right in this area is where we put on that short put. So as long as price is trading away from 38.50, which is, it's so far away from price, like I am not expecting a massive gap down. And if that were to happen though, 38.53, that's the yearly opening range. Like I'm not expecting it to gap down and do that in one day. I have a near-term bullish bias. We were expecting a bounce from here, as if I pull up the exponentials. Sorry, this is not the exponentials. We'll pull up the 200 exponential and the 200 simple. Both of them you can see kind of, down here in this area, bear trap, right? And then a consolidation, and then expansion. Expansion as a bullish engulfing. That's pretty good at support. We'll see if this is able to get back into bullish price action or bullish territory. For me to get bullish again, obviously, we would need to get above 43.40. We need to be closing dailies above that price consistently, not just one or two, but consistent daily closures above that level. Then we'll look for a pullback bullish entry. But longer term, I am kind of still bearish. The reason I am having near-term bullish bias is because of the bonds, right? I discussed this in yesterday's live stream in depth, but as long as the bonds are selling off, I will be bearish on the SPUs or on the SPX, S&P 500. Yes, micro contracts, right? Because it's a small account. I open it with $5,000. On my normal trading account, I do okay. I already have positions and everything ready to rock and roll on that. But anyways, moving forward, Yeah, as long as the bonds bounce, then I could see the S&P 500 bouncing. If we fib this complete and total range from swing high to swing low, I know that's not the swing high. Let's get it on the swing high. You can see that the midpoint of this expansion to the downside is roughly sitting at next week's expected range high. So a lot of confluence right there that could end up being resistance, but we'll see when we get there. All right. So as far as that, like that's pretty much it. The reason I was expecting a bounce on the bonds is because we got yearly support right here. If you look at the yearly chart on the bonds, you can see that the Fed has obviously broken the bonds. You're trading under a level you haven't seen on the TLT since January 2003. So even during the financial crisis and all of that jazz, you didn't get a move like you got or like you saw here on this move. So yeah, it definitely broke the bonds or at least the TLT. As long as we get a small bounce, I mean, that move is overdone in my opinion. This thing is, been oversold for a while now. It was oversold over here and then oversold again. I mean, they're just hammering this thing to the downside. If we bounce, I expect a bounce from the SPOOs, and that supports bullish Bitcoin moves as well. All right. As of right now, it looks like the Fed is pricing in. We're not going to see any rate cuts until around July of next year, according to the market. And the Fed usually does what the market says. And the market is saying that they could see cuts as early as July next year. So that's what Bitcoin wants, rate cuts, all that, Fed pause, Fed cuts. That's what Bitcoin likes. So if we could get rate cuts next year around the same time as the halving, yeah, I could see Bitcoin getting a bullish move from that. So, yep. Excuse the cold. It's going around. A lot of people have one. Thank you guys so much for your time. If you need to contact me, obviously you can email me. But there is links in the description for Weeks, which is the exchange that we are using to trade Bitcoin. I am still using Bitget as well. But Weeks is for U.S. customers. Bitget will not accept U.S. customers, and most of my audience is from the U.S. If you're not in the U.S. and you want to use Bitget, there's a link. If you want to use Weeks, there's a link. And if you want to use tastytrade, so you can deposit a small amount of money, like if you have very little money and you want to try to grow that into something substantial, then I recommend you use my link and follow me. Make sure you subscribe, hit the like button, all that stuff. I'll help you grow that account to the best of my abilities. Thank you all so much for your time. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.